Hello, welcome to Sniper Trades. Today in this video we are going to discuss about a famous indicator which traders use for positioning as well as intraday trades. So the indicator which we are going to discuss today and going to compare pricing chart is called MACD indicator. Some people will usually call it MACD indicator. Its full form is moving average convergence divergence. Saying about this indicator, it is an oscillator and is a lagging indicator, which means that it is a trend following indicator, which means that it will show us the buy or sell signal only after the price has moved in a particular direction or set a new trend. That is what this lagging indicator or trend following indicator means. So this indicator is also classified under absolute price oscillator or APO. There are other indicators which are classified under PPO, that is percentage price oscillator, but this particular indicator, that is MACD indicator, is classified under absolute price oscillator. So saying about this indicator constitutes two lines. There is MACD line that is colored in white and a signal line which is colored in red. So the reason why we are using MACD here with the pricing chart is it is used to find trend, its direction and trend. It is used to find the trend, strength and direction of the commodity or stock. So let's move on to the content of this video. So in this video I am going to discuss about the basic interpretation of or basic idea of moving averages. The reason why I am discussing about moving averages here is throughout this calculation of MACD or MACD, it uses exponential moving averages in its calculation. So that is why I am going to discuss about basic idea about moving averages, and I am going to show how to calculate how the calculation is done in done for each line in MACD and signal line, and also the histogram. So the next thing is I am going to explain about trading decisions with the help of MACD indicator, and then I'm going to show few examples and few strategies with the help of MACD indicator. There are many methods to trade with MACD indicator. We can combine this MACD indicator and its reading with other indicators and also with the price action, and we can trade. I am going to discuss few strategies here. The strategies which I am going to discuss in this video is normal crossover strategy, which traders may be already knowing, and the next one is bullish and bearish divergence, and the third one is this is a good strategy which is called trend line path violation method. So let's move on to the chart in Saroda, and I'm opening crude oil chart here, and I am going to add MACD indicator here. This video is going to be a little bit lengthy as I am going to be explaining the calculation, trading decisions, etc. in depth. So the people who are not interested in knowing about the calculation behind this indicator, you can skip the video to somewhat forward. So now let me add MACD here, and I'll show you the lines here. So this MACD indicator uses 12 period exponential moving average and 26 period exponential moving average, and the signal line, which is the red line, is is of 9 period, so I am adding it. So let me make this wide so that everyone can see it clearly. So you can see this is MACD indicator. In this MACD indicator, this white line is called MACD line and this red line is called signal line. This MACD line is nothing but a combination of two exponential moving averages, that is 26 period exponential moving average and 12 period exponential moving average. For the convenience of explaining, I am going to add both of these exponential moving average into our chart. So I am typing here moving average. I am typing here 12 and the type is exponential, and I am setting its color to green. Okay, this green line or 12 period moving average is called faster moving average, and I am going to add slower moving average, that is 26 period exponential moving average here. So I am typing here 26. I am using type as exponential and I am setting its color to red itself. So as we can see, this red line is called slower period exponential moving average. It is 26 period exponential moving average, and this green line is called faster period moving average or 12 period exponential moving average. The reason why we are using exponential moving average throughout this calculation is because exponential moving average reacts more significantly to recent price changes than simple moving average. If we use simple moving average, it will be somewhat more lagging behind, and it is exponential moving average which responds more quickly and responsively to the recent price changes. So as the price changes in any direction, the slower period moving average, that is 12 period exponential moving average, will respond and rise first as compared to the slower period moving average or slower period exponential moving average, that is 26 period exponential moving average, the red line. So as we can see that the price is moving upward here, and the faster period moving average, that is green line, is responding first. So the green line is going up first and then the red line is moving up. So this slower period moving average, that is 26 period exponential moving average, and the red line is rising slowly as compared to the faster period moving average, that is green line. So that is what we have to know first. So this white line in this MACD indicator is nothing but a combination of these two moving average, that is green and red line. So how this white line is formed here, I will show you how. This white line is the calculation of a difference between this red line and green line. The calculation is as follows. This white line is calculated as 12 period exponential moving average, that is green line, minus 26 period exponential moving average, that is this red line. So I'll write it here. This white line MACD is equal to 12 period exponential moving average minus 26 period exponential moving average. That is how this white line is calculated. And before knowing that, before moving on to the next session, I'll explain about this one, this basic idea about moving averages and its interpretation. So let me show you all one example here. If we take 12 period exponential moving average here and 26 period exponential moving average here, if this 12 period exponential moving average is greater than 26 period exponential moving average, it means that 12 days back people have bought this particular commodity, that is crude oil, at a higher price as compared to the people who have bought this particular commodity, that is crude oil, that is people have bought this crude oil at a lower price 26 days back, but recently, that is 12 days back, the people have bought crude oil at a higher price, which shows that the general demand for crude oil has rose. So recently the price is higher for crude oil as compared to the price 26 days back. That is what this means. And similarly I'll show you an example. If this 26 period exponential moving average is greater than 12 period exponential moving average, that is the slower period moving average is greater than faster period moving average, it means that 26 days back people have bought this commodity at a higher price as compared to the recently, that is 12 days back people have bought this commodity at a lower price. For example, if this 26 period exponential moving average is greater than 12 period exponential moving average, that is this means that 26 days back crude oil was people have bought crude oil at 1000 rupees as compared to the price of crude oil, as compared to people who have bought crude oil 12 days back. 12 days back people have bought crude oil at 500 rupees. So it means that recently the demand for crude oil has reduced and the price has also reduced. So the entire price movement in any market is according to demand and supply. So if the demand is less for the recent period, it means that the price is moving in a bearish direction, bearish trend. This means that if this 12 period exponential moving average is less than 26 period exponential moving average, it means that the general demand for this particular commodity is low as compared to the earlier period, that is 26 days back. 26 days back the commodity had a higher demand. So that is what the basic idea about exponential moving average. And let's come back to the chart. Here I'm using here 3-minute chart, and we can see that here the green line is crossing above the red line, and we know that the faster period moving average, that is 12 period exponential moving average, is greater than the slower period exponential moving average, that is 26 period exponential moving average, which means that the general trend is in a bullish trend, it means that the 26 period exponential moving average is greater than 26 period exponential moving average. It means that the general demand for this particular commodity is more and the price is moving in a bullish direction. So see, the price is moving upwards, and also see that the exponential 12 period exponential moving average is crossing below the 26 period exponential moving average. Here the crossover has occurred and the price is moving in a bearish direction. So the general demand for this particular commodity, that is crude oil, has reduced and the price is moving downwards. So that is what this means. And also now let's come back to the indicator, that is MACD, moving average convergence divergence. So now for the easy understanding, let me say that this at this MACD indicator we have a baseline, that baseline is situated at 0 value. See here, at the 0 value we have a line here, it is called baseline. So if this white line, that is the MACD line, is rising above this baseline, that is 0 line, it means that there is a crossover took place at this two moving averages. That is, if this white line is rising above the zero line, that is baseline, it means that the faster period moving average, that is green line, has crossed above the red line, that is slower period moving average, which means that the price is in bullish direction. So as we can see that here the white line has crossed above the zero line, that is baseline, and here look at here, the two moving averages has crossed each other and the price is moving in a bullish direction. So that is what this means. And also see that if the white line is crossing below this baseline, that is zero line, it means that the green line should be crossed downwards the red line. It means that the price is in general bearish trend. The price must move downwards. And see here, after crossing the white line down below the baseline, the price has moved in a bearish direction. See, that is what this means. So MACD has automated all these crossovers and calculation here in this single line, that is white line, MACD line. And now this red line is nothing but signal line. Signal line is calculated as 9 period exponential moving average of this white line. So after calculating this white line, it will take 9 period exponential moving average of this white line itself, that is this red line. So now I am going to move on to the calculations in MACD indicator. So the MACD line is calculated with the formula closing price minus previous exponential moving average into smooth constant or weight multiplier plus previous exponential moving average. For example, I'll show you one thing. If we are first calculating exponential moving average statistically with an Excel tool or by paper and pen method, we should first calculate a simple moving average of a particular commodity. If we are calculating simple moving average of a particular commodity, so for example, if we want to calculate simple moving average of 12 period, that is we are using here 12 and 26 period exponential moving average. So first we have to calculate 12 and 26 period simple moving average. So to calculate simple moving average of 12 period, we have to take 12 previous 12 days closing price of crude oil and add it together. So we get a sum of previous 12 days closing price of crude oil, and we just have to divide it by 12. So that is what simple moving average is. And for the first calculation of exponential moving average, we will take the previous day's closing price of crude oil here and subtract previous day's exponential moving average. In the initial phase, we don't have a previous exponential moving average to calculate, so we will take simple moving average. With the earlier we calculated simple moving average of 12 period, we will take that particular simple moving average and put it here, and we will multiply it with smooth constant. Smooth constant is nothing but 2 divided by n plus 1. Here n is number of period, so we are calculating exponential moving average for 12 days. So n is 12, so 2 by 12 plus 1, that is 2 by 13. It will be somewhat around 0.1538. So we'll multiply that value here plus previous day's exponential moving average for the first time, that is nothing but simple moving average, the value we have calculated before. That is how the calculation is. And for the next calculation onwards, we will take the previous day's closing price here minus the exponential moving average we just calculated moments before into smoothing constant, that is same value for every calculation, plus previous day's exponential moving average. So likewise we will calculate exponential moving average for 12 period and also for 26 period. So for the calculation of this MACD line, we will take 12 days exponential moving average minus 26 period exponential moving average. That is what this white line is for. And for the calculation of this signal line, we will take this is 9 period exponential moving average of this MACD line. So to calculate this red line, we will just take 9 we will take 9 exponential moving average of previous 9 days and add it together and just divide it by 9. That is how we will calculate this red line. So that is how the calculation is. And now I am moving on to the strategies. So already the video is a bit lengthy. It has passed 20 minutes now, and now I am going to show the first strategy, which is normally traders will be already knowing this normal crossover strategy. Whenever this MACD line, that is white line, is crossing above this signal line, that is red line, we will take a buy or long position. That it is a buy signal. And whenever this white line is crossing below this red line, it means that the price should come down, and it means that the price is coming in a sell side or shorting opportunity is there. That is what this crossover means. So as we can see, everywhere when the crossover occurs, the price will be either moving downward or upward. So if this white line is moving and crossing downwards the signal line, we can see that the price is moving downwards, and see the MACD line is crossing above the signal line and the price is moving upward. That is what the crossover means. And now the histogram part. This histogram is calculated on the basis of a formula, MACD line minus signal line. So as this MACD line and signal line is separated farther, and we can see that here the crossover has happened, the MACD line is going away and away from signal line. So it means that the histogram is growing bigger, as we can see, and later we can see the MACD line is coming closer to signal line, and the histogram is coming smaller and smaller to the baseline, that is 0 value. This histogram is nothing but the difference between these two lines, that is MACD line and signal line. So, and also this indicator got its name moving average convergence divergence, because what this divergence means is, if this white line is moving away from this signal line, it means that the MACD line is diverging away from the signal line. That is what the divergence means. And if the MACD line is coming closer to the signal line, as we can see here, the MACD line is coming closer to the signal line, it means that the MACD line is converging to the signal line, and we can see the histogram is coming smaller and smaller. And also see that if this MACD line is above this baseline, it means that the price is in general bullish direction. So what this means is, and also see that the MACD line, if below this baseline 0 line, it means that the price is in general bearish trend or downtrend. So now what I have to tell is that if the MACD line is above this baseline, it means that the general trend is in bullish direction. And when we get a signal here like this in a sell signal in general bullish condition, it is not a good idea, right, to short here in a general bullish trend. It is risky. And similarly, let's see here, the MACD line is below this baseline or 0 line, and the price is in general bearish trend, and the crossover has occurred in a buy signal. A buy signal in a general bearish trend is a risky position. So this is not a good idea. So that is the first thing I have to say, but there are some good strategies to use here. I'll show you how. In the remaining part of the video I am talking about this. So I have covered the normal crossover strategy. It is over. Now I'm going to discuss the bullish and bearish divergence. Bullish and bearish divergence is nothing but the price for example, the bullish divergence occurs like this. I'll show you how. Here is an example, a perfect example here. Today the crude oil price has made a high here. See the high here. When the price has made a high here, the MACD line has also made a high here. And as we can see, the price has made a new high at this particular point. But as we can see, the MACD line has not made a new high, but rather it formed a new low here. It means that as the price is making a new high and moving higher and higher, the MACD line is making a lower high, which means that the momentum is less and the trend is weakening, which means that this particular high is not a good idea for further long position. The momentum in uptrend direction is soon going to end here, soon going to come downwards here. That is what this bullish divergence means. So this is what bullish divergence means. And similarly, bearish divergence. In bearish divergence, the price will make a low and later will make a lower low, but MACD line will not make a lower low in the second time, but it will make a higher low. It means that in the second time when the price has made a lower low, the momentum in downward direction is not sufficient enough to support the price in a further downward condition. That is what this bullish and bearish divergence means. So as we can see here, the bullish divergence has occurred. So the price is making a higher high here and the MACD line is making a lower high here. So at this rise we can consider a shorting opportunity here, as the price is moving downwards here. See, as the price is making a new high, it will be bouncing downwards. That is what the bullish divergence is. And similarly we can do the opposite in bearish divergence, and I'll do another video for that particular. I am not getting enough examples for this particular chart. That is why I am skipping this now, and the video length is getting larger and larger. It is already 28 minutes now. So now I am going to discuss the next method, which has given perfect opportunity in this particular day for crude oil. And I'll also upload a live technical analysis for this particular method, that is trendline path violation method, today itself. I have already recorded this trendline path violation method real time and live for this particular trade. See, the price has moved downwards here. It has obeyed particularly this method, trendline path violation method. So I have recorded it and I will be uploading it after this video. I will be uploading it. So let me explain the trendline path violation method. It means that we will make use of trend lines here. So I'll show you how. So as we can see, so before that I have already made a picture here in MS Paint. For a downtrend trade, we can use this particular condition. This blue line is MACD line and this black line is signal line. So as this MACD line is crossing above this baseline, that is zero line, so which means that the general trend is in bullish direction. So in a bullish direction we won't take a the we won't or taking a short position in a bullish general trend is not a good idea. But according to this particular strategy, when some particular condition is met, this is a perfect opportunity for a selling short position. I will show you how. If the MACD line is already above this baseline, it means that the general trend of price is in bullish direction, and we will join one high and one another higher high here with the use of trend line. This is a trend line. So whenever this MACD line is breaking this particular trend line resistance and moving upward and then giving a sell signal here, we will take short position here, because the MACD line has violated its original path. It should have bounced downwards at this particular resistance, but rather it broken its resistance and move upwards and gave a buy position here. So if this MACD line is crossing this particular resistance, we will get a buy position here. We can take a long position here and exit it here at this sell signal. And similarly, after the MACD line has violated this particular resistance and moved upward and then gave a sell signal, we will take a short position here, and the movement will be large. That is what this strategy means. And similarly, for a long position, if this MACD line is below the baseline, that is zero line, it is in a general bearish trend. So the price must be moving in a bearish trend, and a long position in a bearish trend is not a good idea. But according to this strategy, when this path violation condition is met, this long position is a perfect opportunity for a large movement in uptrend. So as we can see, we will draw a trend line at a lower low and higher low. See here, we have drawn a trend line here, and whenever this MACD line is breaking this particular support, this trend line support, and coming downward, we will get a short position here. So if we take a sell here, the price has moved down up to here, and when the MACD line has crossed above the signal line here, we will exit that position and take a long position here. So this long position is a good idea here. The strategy is about this long position, not about this sell position here. Similarly, in the sell side in the previous explanation, so as we can see that after the path has violated and it has crossed downwards, if this MACD is crossing above the signal line and giving us a buy signal here, we will take that. The movement will be large. I will show you in live chart here. So now I am going to draw trend line here. So now see, I am joining this low and this low, this low. So as we can see, this trend line will act as a support. So whenever this MACD line touches this particular trend line support, it should bounce upward. So as we can see, here the MACD line has bounced upward, and here too bounced upward, but here this MACD line is below this baseline and it has violated its path and came downwards. See at this particular level. At this particular level, MACD line has crossed downwards the support and came downwards. So the price is moving downwards, and later see, after path violation, after this MACD line has violated the path and came downwards, later we get a buy signal in a general bearish trend. So this means that in a bearish trend, if this signal occurs, according to the path violation, it is a strong uptrend is coming. So as we can see, after this signal, this particular signal, the movement is more. See here, here also MACD has crossed above the signal line, but the movement is less. But at this particular level, the price has moved much. See, at from 3778 level, it has made a high of 3827. That is the great movement occurred after this particular crossing, after path violation. So similarly, this was an example of long position. Similarly, we get a shorting opportunity at this particular chart itself. So I am joining this high and this lower high. So see, this trend line will act as a resistance, trend line resistance. So whenever this MACD line is touching this particular resistance line, it should bounce downwards. So contrary to the this condition, the MACD line has crossed upwards this resistance and broken it. So we can take a long position here after this crossing. So see, the price has made a new high of 3827 from this level, that is 3808 level to it made a high of 3827. That is a movement. And later see, it has given us a sell signal here. The MACD line has crossed below the signal line at a general bullish trend. So a sell signal in a bullish trend, that is normally not a good idea, but according to this particular condition, it has violated its general path and gave a sell signal. So it is a good opportunity to trade here in a downtrend position or sell position. So as we can see, the price is moving significantly lower. See here, the price has moved down much, but as we can see here and here, the MACD line has crossed below the signal line, but the price has only moved very little. But particularly here at this crossover downwards, the price has moved down significantly. That is because it is because of this particular trend violation and then a signal. This is our this is what the trend line path violation method is. So practice drawing trend lines in our charts. And also one more method is there, one small method. We can just draw trend lines here at higher high and lower high, and lower high and lower higher lows. Likewise, as we can see, we can join this particular low and this higher low, and whenever the MACD line is crossing below this particular support, this trend line support, we can consider a short position. See, after this crossover, the price is moving downwards. See, after this crossover, the price is moving continuously downwards, and whenever this MACD line is giving us a long position or buy position here, buy signal here, we can consider about exiting our position or trailing our position or whatever you wish. And similarly, I'll join one more thing, higher high and lower high. I'll show you how. So as we can see here, I am joining higher high and lower high here. So see here, I am joining here higher high and lower high, and whenever this trend line resistance is broken here, this MACD line has broken and coming upward here, the price will move upward and we can consider a long position. And whenever this MACD line is crossing below this signal line, that is red line, we can consider exiting our position or trailing to cost or trailing to profit. So that is what the simple method is, trend line method to trade. This is very effective method. And for the stop loss, I'll show you how. For the part of stop loss, it is according to our risk taking capacity. We can either place a recent low or recent high in sell or buy position. And as we have talked here, it is all probable trades. The probability of moving in a favorable direction is more as compared to the unfavorable movement. So that is what I have explained here. So I'll show you an example for stop loss. So I am joining here this higher high and this lower high, and whenever this particular resistance is broken, we can consider a long position at this level, and we can put a stop loss at a recent low, either at this particular level, or this particular level, this recent low, the recent low position according to a risk taking capacity. If the risk taking capacity is low, we can just put a stop loss at this particular low, or if our risk taking capacity is more, we can place a stop loss at this particular level. So if we place stop loss at this particular level, the probability of hitting the stop loss is very less, as we know that this is a support. As we can see, the price is moving, the price has bounced here at this particular level. It will be acting as a support. And similarly, I am using here Heikineshik candles because the price movements can be easily tracked in Heikineshik candle and can be trailed also. So the video length has been a bit lengthy. So thanks for watching, and practice drawing trend lines. See you in the next video. Go to our YouTube channel and click this Telegram channel button here to join our Telegram channel, and also subscribe, and also click the bell icon right next to it for getting all the notification when I upload a new video. I'll be uploading new videos about technical analysis of intraday and post-trade trades and much more. So join our Telegram channel to see daily levels for Nifty, Bank Nifty, and stocks future. I am using an Excel tool for calculation. So for the levels, please join Telegram channel by using this button, and subscribe and wait for another videos for technical analysis. So thank you. I'll be uploading the live. I have recorded live technical analysis for this trade, this trend line. What is this trend line path violation method? So for this sell signal, I have recorded live technical analysis even before this movement started. So I will be uploading that video after posting this video. So stay tuned and watch it too. So thank you.